Not a day will go by. You'll hear an advertisement on a podcast or on the radio. You'll see a commercial on TV, or you'll click and you'll see on Facebook an advertisement for term life insurance. The question is, can you believe what the advertisements tell you and what's missing? Today's video, we'll take a closer look. So like I said, you'll be able to find information on the internet left, right, and center, as well as everywhere you hear on podcasts or on TV. Let's just take a quick look online. Here's an example. Another one. Another one. Another one. This is my professional firm, GH2 Benefits. You can see online quoting. So in addition to a bunch of other different types of products in financial planning matters, of which term life insurance is certainly one, let's hope this thing loads a little bit quicker, is that you'll be able to see that you can see, yes, online quoting. And sure enough, down here, life insurance. Bang. In other words, getting the price, knowing what advertisements are in there, what's being said and what's being asked for, is everywhere. That information's everywhere. So let's just take a quick look at what term life insurance actually is. And we'll pull up I arranged for some slides here, so we'll just do this real quick. Let's go to the presentation. There we go. So this is what you need to know. So the basics are well known to many. Term life insurance pays a benefit amount, a death benefit amount, when you pass away. However, it has a single expiration date. Termination date is the formal name. Okay, it'll be stated. Let's call it 20-year. It's a very common term. So in 20 years, if you pass away within this 20 years, the entire benefit amount goes to a beneficiary, whether that be your spouse or your children or some other named party. Of course, the key thing is that term life insurance is inexpensive when compared to other types of life insurance, right? And that is the subject of all of these quotes and all of these advertisements and commercials. You get $500,000 for someone 35 years old at less than $1 a day or something like that. There are little twists, meaning that there are certain types of term life insurance which can be renewed beyond that date, but at much higher rates. Now you need to be careful because some people wrongfully call it, well, this is whole life. It's not really. It's renewable. That doesn't necessarily mean that it's renewable at the same price. And for the record, our firm, I won't allow us to even quote this stuff. It is misleading. It's misleading to you. You can see there are flyers in the mail that you can get. You get X dollars for some number of years or for the remainder of your life, but it's only guaranteed price for the first 20 years. This to me is, it's misleading. You're not getting what you're paying for. So the question is can you believe the prices that you read in the or you see in the advertisements, here in commercials, see on TV? The answer is yes. Those prices are not wrong. They're not wrong. It's very unlikely that these commercials are just misstating something off by miles. Okay, but you do need to keep a couple of things in mind. Number one, your health must be spotless. And by spotless, what I mean is there can't be a pre-existing condition. For example, if you have a history of cancer, or you're a female and you've had a history of breast cancer over the past X years, okay, the premiums that they quote on these commercials may not be correct. If you're diabetic, especially if you have insulin, if you're insulin dependent diabetic. Of course, height and weight are considerations, and tobacco use. These all change the price that you hear on these advertisements. Those prices immediately become invalid, right? They're invalid for a 30-year-old female, right? If you have body mass index number, which is unacceptable for whatever reason, and I'm not casting blame, this could just be a DNA fact, okay? that those prices that you hear on the advertisements probably don't work for you. Now, let's say you are in excellent health, no medical history, ideal height and weight, don't use tobacco. Are those prices right? The answer is going to be yes. You have to remember, however, when you hear those prices, that's not really any specialty information. I can easily match the price. The price is known, right? The fact is that, you remember on all those websites that I showed you, they're going to be accessing the same carriers, the same sellers, the same life insurance companies, right? And the reality is, if I listed 40 sellers, I'll be able to find almost an exact tie down to the penny. Down to the penny. That's real. That's real. Okay? So the idea that you're being told we have the best price, that's not anything special. That's not anything special. You need to stay to the end of this video, because I'm going to give you the punchline, because this mistake happens all the time when it comes to financial advice or financial information given to the public. Now, there are problems here. Okay, let's say, for example, you're of average height and of average health. You've got some, you don't think it's serious. Okay, the thing to know is that we've got a ton of different sellers. That's true. And we can find a tie on the price if you're in perfect situation. But the moment you move a little bit away, you have to remember that the sellers can judge your background by themselves, and they're not using the same grading scale. And this is called underwriting. This is that jargon of term life insurance, of insurance, underwriting, right? It's not only that the insurance companies have the ability to ask you, but their grading curve is different from carrier to carrier. Okay, that's a very important thing. And the main reason for that is that term life insurance is very risky to the seller. In other words, whenever I sit up and talk about financial products, I always tell persons, look, there are two parties. There's you, the buyer, and then there's a seller. Now put yourself in the shoes of the seller, and what do you get? The seller is selling at a low and hyper-competitive price. Hyper-competitive. Like I said, an exact tie down to the penny. You're a 35-year-old female, I'll be able to find a tie. But you must pay the entire benefit amount if you pass even a day before the expiration date. My fat head is blocking text there, but that's what it says. So let's just take an example. Right. So let's say the termination date is July 31st, 2025, and it's just a hypothetical. So if you pass away on July 30th, one day prior to July 31st of 2025, the carrier has to pay 100%. No questions asked. That's it. Yet if you pass away just 2 days later, the carrier pays 0. So not only are you the buyer, you're taking risk, right? Because you're paying a small amount, and if you pass away on August 1st, oops, I have a typo there. This should be 2025, right? Just 2 days later, right? The carrier pays you nothing. But the same thing, the equal and opposite has to be said to the seller. Look, they keep your $20 a month, and they put it into their pocket if you pass away on this date, or if you pass away on August 1st. They have to pay 100% of the benefit amount, $100,000, $500,000, whatever you've been quoted. They have to pay the entirety. So those are 2 very risky days in there. And because of this, the sellers, and this is not even on this slide, which is that the price is competitive. That's true. But this underwriting process is very, very different across carriers. Very different. Okay. Now, the problem here is that you could think to yourself, okay, Jay, you just said that there are 40 different sellers and I can find a virtual tie. Why don't I just go and, apply to a bunch? That doesn't work. That doesn't work. Why? It's because rejection today increases the likelihood of rejection in the future. Okay, so let's just say, and this is the analogy I draw. Let's say you take a pop quiz in history, right, and you don't do well. Well, the teacher goes back to the teacher's lounge, right? And guess what? They tell the other history teachers, you're already on the radar, right? So at the margin, do you get the benefit of the doubt when you say, okay, my homework was late, the dog ate it, can you give me an extension? If you failed at all of the pop quizzes prior to that, let's just say that common sense tells you the likelihood of getting the extension due to your excuse of the dog eating your homework, not great. It has not improved, okay? In the same way in insurance, what ends up happening is this company exists, MIB Inc. And when you are applying for any insurance, life insurance, that can be term life insurance, whole life insurance, health insurance, right? You're giving them the access and the release of your information and results to this company. You are. That's one of these release forms on all these forms. Okay. You'll be asked on your life insurance application, have you been denied? Have you received an increased rate in the past? Okay, so the problem, you can see it, which is that, okay, the price looks attractive. And so you go, okay, I want that price. And that's understandable. We're all trying to save money. And, I'm the last person to say be insurance poor. I never suggest that to anyone. But the fact of the matter is if you get rejected, that later it increases the probability of you getting rejected, just like your complaint to say, hey, can I have an extension on my homework because the dog ate it last night, right? What's not being told to you is that well-known carriers tend to package sell life insurance with auto and other insurance, but create this problem. And I'm not going to name carriers, but it is a fact that, yes, you can get the package discount, right? 15% off my homeowner's insurance if I get, my life insurance all together with it. We know this, right? You didn't even have to see this video to know this exists. The issue is if that insurance carrier is a tough grader and then rejects you, then you have a problem later. And now that 15% discount you were looking for leads you to potentially be not accepted by any life insurance of this sort in the future. And now you've opened an unintended can of worms. And this is the problem that what ends up happening, and that's not told to you on these advertisements that you see every day. Now, unfortunately, the fact is that the life insurance carriers, that there's this different grading scale across carriers, right? This is not told to you. The advertisements don't tell you this, right? They just tell you 30-year-old female, 35-year-old male, $500,000 of insurance for less than $1 a day or for pennies a day, something like that. Right? They don't and they tell you, look, we've got access to 30 different carriers, 15 different carriers, the nation's largest carriers. They don't tell you that the carriers have their grading scales are different. And the fact is that not even popular books and people don't mention these facts. Dave Ramsey, Freakonomics, very, very popular sources. Okay, they say, okay, just get term life insurance. Dave Ramsey's famous for this. And it's true. We'll get to the punchline at the end of this video. That doesn't mean today that I'm saying, okay, just give up, right? In theory, it's correct. Freakonomics, very, very popular book, just says, okay, just get term life insurance. Just get term life insurance. Yeah, except for these problems, right? That you just calling up somebody and just going and clicking on a commercial and then applying isn't that simple. And the fact is that in marketing this stuff to you, in trying to communicate to you, hey, call us, click on us, etc., these differences they matter. They make a huge amount of difference in the outcome. Now, you could watch this video and to now go, oh, forget it. I give up. And I get this all the time. It's so confusing. These hurdles seem insurmountable. I just should give up. I'm tired of the advertisements. I don't like Jay. I don't like you financial people. I get it. There is consumer fatigue in every financial product. I understand that. Does this mean you should then just throw your hands and give up? The answer is no. And the reason is, and this is very important, it still has a very important function, right? Meaning that you're throwing out the baby with the bathwater. And I'm not telling you that term life insurance is, the holy grail. But what I'm saying is, if you had a reason to purchase term life insurance, and then you got confused by all the advertisements, and you can be confused. Maybe this video has told you, hey, it's more complicated than it seems. And it seems too complicated to address. I should just give up. I'm also not saying that. Why? And that's because it has some very important functions. And here are a few. And it's not a complete list. For example, you could have a mortgage. This could pay off the principal if, for example, you prematurely died and you had a principal balance. You can have children's future educational expenses. You have income replacement for young families. You're the working spouse. You're the stay-at-home spouse, right? Now you pass away predeceased and your children need home care, child care. Okay. In other words, these are important functions. And the price is at a price point where people can afford. And in addition to that, term life insurance is very competitive. Like I said, if you're a 35-year-old female, 35-year-old male, 40-year-old female, 40-year-old male with excellent health, you'll get a tie, down to the penny. And because it's so competitive, the sellers, the life insurance carriers have created new variations. For example, here are a couple. Some will allow you to collect a large percent of the benefit to be paid even if you're still alive. So you may know that employers may pay for a short-term disability, but what about long-term disability? That you cannot take care of yourself. All right, well, and let's say you had a $100,000 policy, $500,000 policy. Well, if you have a critical illness, that is slightly different, right? Critical illness means that you have a terminal illness, for example, that you are not expected to live over a year. That is already known, right? That has been a market standard. What is new is this living benefits is new, which is if you have a permanent medical situation where you can't take care of yourself, that some carriers are now adding this extra benefit. And it's just simply due to how competitive the world is. And it goes back to, you trying to understand whether or not term life insurance and what its function would be. I always tell people this on financial products. You first need to define what's the point, right? Before you get to price, what's the point? Right? Does it have a function? Because if it has no function to you, I just tell you to pass. But if it has a function to you, and these are important functions, then it's worth exploring. Now, and the bigger picture, the bigger lesson, the bigger takeaway that I can give to you on this video is the fact that mishandling or misunderstanding the advertisements and what they say and what they do not is a very, very common error that many people make, irrespective of age division, irrespective of financial, resources, background. It doesn't matter. It doesn't discriminate. This is the common error, and here it is right here. People confuse commodity with specialty. People confuse commodity with specialty. Well, what does that mean? A commodity is something that can compare exactly with each other. For example, you go to the hardware store, and I don't mean to, offend, the True Value hardware store owner, right? But generally speaking, right, a 3-inch nail and a 3-inch nail are almost carbon copies one for the other, right? You can directly compare them. They're not lots of extra features to a nail, right? They can compare it exactly. You can compare the prices exactly. Term life insurance, after you cross the finish line, right, is a commodity. And that's my point. The advertisements are trying to tell you, hey, we have a special thing, and the special thing is price. Except what? The price isn't a specialty. It's not a secret. Just because you can't observe it doesn't make it a secret, right? I've already shown you these websites, and that's not the full list of websites. We have our own, gh2benefits.com. You can go there and request for this price, and I'm not going to tell you anything different, right? I'm going to be able to find a tie. If you're a 35-year-old female, I'll be able to find you a tie if price alone is the matter, right? Here's the thing about term life insurance, right? As I've told you earlier in this video, which is what you think is perfect health is not necessarily what sellers think. And not only that, the sellers also may slightly differ in their grading scale. And knowledge of these facts is the specialty. And now you've got it, right? I've given it to you here for free, right? When it comes to term life insurance. And this exists all around in personal finance. Let's take what a specialty. A specialty is something that cannot easily be replaced, right? The information so far in this short video, right? It doesn't sit there on selectquote.com TV advertisement. And I've got nothing against selectquote.com. I don't know a single person who works there, right? The point of what we are trying to do, right? The point of what GH2 Benefits is trying to do, the point of this video is to tell you something that doesn't exist in the public domain. And the issue is that getting this wrong is large and potentially irreversible. Getting it wrong from the beginning, right, can be the downside. If you get rejected here, if it increases the likelihood of rejection in the future, that's the downside and potentially irreversible. What, the MIB Inc. throws away your data from a year ago? Doesn't. Very important facts. Now, don't get me wrong. Term life insurance is not the only place where this similar error occurs, right? It's not the only place. I've written a book about this. Medicare, health insurance, very, very similar. You see prices, you see advertisements. We're going to come up into a time period during football season, right? There's going to be like 24/7 infomercials about Medicare Advantage. I promise, like guaranteed, right? But the point is selection. Selection isn't the commodity. It's not the commodity. It's the specialty. The fact that it's a price, $0 premium, no extra premium. Yeah, guess what? There are lots of plans at zero in Medicare Advantage. Selecting amongst them, however, that's your specialty. And this is the common error. It doesn't matter what your age division is, doesn't matter what your background has been. This error repeats all the time. You can look at the other videos here on this channel. That's your common thread. whether it be portfolio analysis, whether that be just trying to ignore not following the herd and what you're being told as averages. Watch the other videos. This is your common thread. I'm Jay. Hope you got something from today's video. Talk to you next time.